So one of the great companies in the Bay Area at the time was Silicon Graphics, and Silicon Graphics is now where the Google headquarters sits. And in the mid '90s or the early '90s, Silicon Graphics was the hot company. It was kind of the Google or Facebook of today. And Jim Clark, who was the professor at Stanford who had founded Silicon Graphics, did not go back to his venture capitalist when he founded Netscape. So he left Silicon Graphics to go set up this new company. And so this is a long game. You never want to take so much equity that someone doesn't come back to you to do the next thing or doesn't refer you to the next person from their group. It's a long game. You get rich over years with the same people that you're investing in. So back to numerator denominator economics, what's the percentage of the company that someone's willing to sell you where you're not going to hinder or hurt the company in the long run? And that number is probably somewhere between 10 and 33% roughly. So depending on what they're looking for and depending on how much you can take of the company, and then you do some kind of market comps to figure out, is that fair, is that unfair, or that other companies get funded with that similar kinds of valuations or not. If that numerator denominator works out to that business has to be worth $100 million in order to just get started, it's probably not going to be a very attractive proposition for an angel investor. And, if the business is worth like 100K, they're probably not going to be taking too much money in, and they're probably going to regret having sold 10% of their company for 10K, and they're probably never going to call you again. So, these are all imaginary. And I would argue whether you do a valuation at 1 million or 5 million or 10 million or 20 million, it kind of really doesn't matter if the company turns out to be $1 billion or $10 billion or $20 billion. And the cost of not being an investor is probably more important than whether you got in at 4 or you got in at 5. And so I would have a tendency to slightly overpay within reason versus be really parsimonious and try and get the best deal. The other thing is you're going to work with this person probably for the next 10 years of your life. And so if you take too much or you're overly negotiating from the beginning, it kind of sets the entire relationship off on a bad angle. And it's hard to then be productive and be in a healthy relationship for the next 10 years. So there's no right answer for this. Now, obviously, angel, you want the biggest percentage of equity that you can get. And as the founder, you want the least amount of equity. You want to give away the least amount of equity. And there's usually a happy medium in between those two. And like I said, it's usually somewhere between 10 and 33%.